everybody, it's your boy Sean McLaughlin, Options Sean on Twitter X. This is the All-Star Options Jam session for October 12th, 2023. Hope you're doing well. This is a session where we review positions that have had some action this week, any exits that we've gotten out of, whether it's a win or a loss, where we update some stops on some existing positions, and we touch on new trades that we've put on this week. So let's get into it. But before we do, of course, I have to drop the old disclaimer to make the lawyers happy. Everything we discuss here is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you learn something along the way. Now, this one's going to be a little bit short and sweet. We don't have a whole lot to talk about, which is good. But let's start with the big picture. Here's the S&P 500. We've had a powerful rally over since we last spoke. Basically starting Friday, we had a big whiplash day on Friday. I tweeted about it saying, hey, how was your whiplash? And that was just the beginning. Markets have done nothing but gone higher all week since then. Now, does that mean that the low is in and that's it? And we got nothing but blue skies ahead? I don't know. I'm not so convinced just yet. My partner Steve Straz is pretty bulled up, but me, I'm more of a wait and see guy. I'm not totally sure that the coast is clear as of yet. So even though I put on a bullish trade yesterday, which we'll talk about, it wasn't aggressively bullish. I hedged my bets a little bit. But that's where we are in the S&P, and a quick look at the volatility. Volatility is coming back down a little bit, which is to be expected during a market rally. Still way off the lows of VIX, so certainly not markets, at least from a volatility standpoint, certainly not signaling the all clear sound just yet. But let's talk about this week. So it's a mixed bag this week. We've had some good news. We have some bad news. Let's talk about some good news first. Qualcomm. This was one of the many delta neutral trades we've put on over the past month or so. Because of the sideways market, this sloppy market that we're in. This is, to me, feels like the environment to be selling premium in, and Qualcomm is one of those trades. We did an Iron Condor. We put this trade on September 22nd. We collected $1.30 for it. We were able to get out of this trade on Monday at our profit target for 65 cents, which is what our profit target was. We wanted to buy it back for half of what we collected. So we sold it for $1.30, bought it back for 65 cents on Monday. So we're out of Qualcomm. This one is bad news, not terrible news, but next gen, ticker NXC, we had two exits, if you want to call them exits, in mind for this trade. These are long February 7th strike calls we paid 60 cents for. We basically had two ways we were going to exit this trade. Either one, we got all the way into November, which was basically 45 days from the day we got in, and if the calls were out of the money, we were going to get out, because this was kind of like, hey, this thing's either going to go now or it's not going to go at all. And so if it wasn't working for us by November, we were going to get out. Well, that doesn't matter, because the other reason why we wanted to get out was if these calls lost half of their value. So we paid 60 cents for them. Well, yesterday they were trading at 30 cents, which was our signal to get out. I got out of them yesterday. I think I got 35 cents for them. But either way, trade's not working. The chart clearly shows that. So we are out of next gen NXE. Not a big loss. Well, those are the kind of losses we'll take all the time. All right, we only have one updated stop, and that is our TAL Education Group, ticker TAL trade. These are October options that expire end of next week. So we are aggressively trailing our stop in this one. This is a winner. I mean, unless something drastic happens, we're going to book a win in this trade. We're long the November 7 calls. We paid 85 cents for them. The stock is in the money, comfortably in the money right now. The stop we're leaning on right now is $8.75. That was Tuesday's low, or Monday's low, I believe. We're down today. This chart doesn't show today's action, but we're down. We're actually getting kind of close to our stop. So if it hits it intraday, even intraday, I'm out. Probably a good chance that whatever today's intraday low is, if we don't get stopped out today, that will become our new stop as we move forward. The plan is every day I look at this chart now, because we're getting closer to expiration, and I'm basically trailing a 3 to 5 day low That's my trailing stop. I'm using a little discretion, of course. You know, sometimes it's 3 days, sometimes it's 5, depending on what the chart looks like. But I can tell you right now, knowing what's happening today, that whatever today's low is intraday, that's going to be my stop going forward. So keep an eye on TAL. Either way, this is a winning trade. We're going to be happy with the result unless something drastic happens. Either way, defined risk, right? All right, the new trades here, we'll just touch on them briefly. Costco, COST. We put a delta neutral trade on in Costco. As you can see, this thing's kind of going sloppy sideways for the last few months. The utility sector, XLU, boy, this thing really got killed recently. It's had a nice bounce back, which actually may play a little havoc on our trade here, but we are delta neutral, short premium, and XLU right now. And then yesterday we put a trade on Adobe. You can find a video about that trade on Stock Market TV. I go into all the details, and all the details for all of these trades can be found at allstarcharts.com in the members section for the options members. If you don't have access to those, shoot us an email, info@allstarcharts.com. There it is right there. And you can get all the full details, the trading plans where we talk about why we're getting in. You know, we talk about the technical picture that we like and why we're interested, how we're going to trade it, as in what strategy we're using, where we define our risks, or where we take risk off, right? When we clearly define where we're wrong. All right. So if X happens, then boom, we're getting out. All right. And then we also show you where and how we're going to take profits. All that stuff is laid out in every blog post for every trade, available to All Star Option subscribers. If you need access to that, shoot us an email, info@allstarcharts.com. We also have a live chat room for subscribers. Love to have you in there engaging with the community. All right, everybody, that's it for me this week. If you have any questions, hit me up. Find me on Twitter. My Twitter handle is OptionsSean. Have a great rest of your week. Have a great weekend. We'll be back at it again next week. Take care, everybody. Until then. Thank you.